Hi there, welcome to kneppyinvests. In this video today, I am going to be featuring a company, DGL Group, that I do find quite intriguing. The first reason I find DGL Group intriguing is because the share price has about tripled since they listed on the ASX back in late May 2021. And the second reason I find DGL Group intriguing is because they have significant tailwinds behind the business right now. And those tailwinds have to do with AdBlue. So if you don't know what AdBlue is, perhaps you should stop living under a rock or in a cave, because AdBlue has been all in the news over the past 2 months and is still in the news. So just Google AdBlue and you learn all about what's happening in the world right now. Now, the reason why I'm excited about DGL Group is because they have exposure to AdBlue, and they've actually increased their exposure through an acquisition they made in the middle of October. So in this video today, I'm going to be introducing you to DGL Group because it is a recent IPO. We'll be looking at what this company does, looking at financial state, financial year 2021 numbers, and then finish looking at the company's chart. DGL Group is an end-to-end chemical supply chain management company. They have 3 divisions. The first division is their chemical manufacturing, and they manufacture chemicals for the agricultural, water treatment industries, as well as construction, cleaning, and automotive applications, hence AdBlue. They also have a warehousing and distribution division, and the final division is environmental solutions. And anytime I see a company that is into environmental solutions, I do want to do a little bit more research on that company because this is a significant growth area. And in their environmental solutions division, they deal with lead battery recycling and liquid waste treatment. Wherever I see a company have a few divisions, a few verticals, call it what you will, I always like to see which vertical or division is the more successful division, which division brings in the most revenue, that sort of thing. And DGL Group provided this information in their 4-year results presentation released in August. And by far, the biggest division is chemical manufacturing. It did grow quite slowly from financial year 20 to financial year 21, about 3 to 4%, up to $97.3 million in revenue. And more than likely, and I don't want to get too far ahead of myself, I do think for financial year 22, we are going to see, or DGL Group will see, significant growth in the chemical manufacturing simply because of AdBlue. Their environmental solutions division is growing fairly anemically. Well, it did grow fairly anemically over the past year, but it did grow to $63.2 million. And their warehousing and distribution division is their fastest growing, but is their smallest division. But it did grow from $27.6 million to $40.9 million, which is about a 50% increase in revenue over the past year. DGL Group was founded in 1999 by a New Zealander called Simon Henry. I'm assuming he's a New Zealander because that's where he founded this company. And DGL Group did list on the ASX on the 24th of May 2021. Now, Simon Henry is not only the founder, he's also the current CEO of DGL Group. Not only is he a founder and CEO, he is a major shareholder of this company, owning 54% of the company. And not only does he own more than 50% of the company, he's also increasing his holdings by purchasing the company's shares on market. And recently he bought $500,000 worth of shares between December 17 and 20. So Simon Henry is highly bullish about the future of this company. Potentially, he's highly bullish because of AdBlue and those tailwinds behind this company right now. Another major shareholder is Milford Asset with 4.5% stake in the company, but that's significantly short of what Simon Henry owns. The market cap of DGL Group at $2.82 is $784 million. And for the fact that the share price and value of this company has tripled since they listed, that means the market cap of DGL Group when they listed was less than $300 million. And we look at the financial state, we look at the tailwinds behind this company, that would have been a great time to take a position in this company. So only if I had a time machine that I could go back in time and buy some DGL Group shares. And naturally enough, the ticker code for this company is DGL. Before we have a look at the financial state of this company, just want to mention that DGL Group did make an acquisition of another company called Kneppy in financial year 2021 around January. So they only had that acquisition for one half of the year. So most of these numbers for financial year 2021 are pro forma numbers. These are not the numbers they reported. These are just the numbers you would assume they would have reported if they owned Kneppy for the whole financial year, not half the year. Anyway, revenue increased from 180 million to 197 million, and those financial year 20 numbers are also pro forma as well. Operating cash flow increased from 17.6 million to 28 million. Gross margins remaining steady at around 40%. Profit increased from 4.8 million to 11.3 million. Because of the IPO process, they received proceeds of $100 million because of the IPO. They have net cash of 35 million. Price to sales ratio at 4, not too high, not too low, about right for this sort of company. But the price operating cash flow does seem a little bit high at 28. But I think what the market is doing, they're paying or willing to pay a bit of a premium for DGL Group right now because there are expectations that this company's financial year 22 results will be significantly higher than financial year 21. DGL Group haven't released any guidance for financial year 22. The only thing they've mentioned is they are expected to exceed their prospectus forecast for the financial year, and there is a possibility that if they do release any guidance, there might be a profit upgrade in the future if these tailwinds behind the business are real and they increase. Whenever a company releases their full year or half year results, I do like to read the cash flow statement in particular, and that's definitely true for DGL Group. And there are some red flags here, particularly when I look at the cash flow reported in operating activities and then look at the capital expenditure, which is the purchase of property, plant and equipment. And this has happened 2 years in a row that the capital expenditure exceeded the cash flow from operating activities, which means DGL Group was free cash flow negative in 2020 and 2021. And there is a possibility that one of the reasons they listed on the ASX was to increase the cash on hand because they are free cash flow negative. For instance, in 2021, they generated $19 million in operating activities, but they spent $19.3 million on capital expenditure, which means they were free cash flow negative. They also spent $28.6 million on that acquisition, but they received $100 million in the IPO process. So by the end of the year, they still had $43.8 million of cash. So this is something to be aware of, that DGL Group was not free cash flow positive in both 2020 and 2021. One of the reasons I'm really intrigued by DGL Group is their exposure to AdBlue. And they increased their exposure to AdBlue in the middle of October when they acquired a company called AusBlue, who manufactures and distributes AdBlue. They already own a similar sort of company in New Zealand, so they already had that exposure to AdBlue, but this just increases their exposure. And if you go to the AusBlue website, there is a banner right at the top, and that banner states, the Australian AdBlue industry is experiencing significant challenges. Thank you for your patience as we work through the backlog of inquiries and orders, servicing our clients as our primary priority. They also have an alert about scammers. And whenever you see scammers entering a situation, you know that situation must be serious and there must be a lot of money in taking advantage of that situation. They have an alert that states, we have been notified of a business claiming to be associated with AusBlue and trying to sell urea directly to farmers. We are not associated with such business. And urea is the problem in AdBlue. So urea is a major constituent of AdBlue, and urea mostly comes from China. And China has restricted the export of urea. I'm not sure why, but it could be because urea is used largely in fertilizers as well, and maybe they just want to, or they need a lot of fertilizers in China right now. I'm not sure exactly the whole story, but it all comes back to urea, and this is the reason why a lot of these scammers are selling urea directly to farmers. Maybe it's not a scam, but they're using or claiming to be associated with AdBlue, which is in a way sort of a scam. As we take a look at DGL Group's daily chart since they listed on the ASX back in late May 2021, a lot of positive sentiment behind this company, particularly from when they listed to late September. And during that period, their share price more than tripled from 90 cents to a high of $3.30. The intriguing thing I do find is that AdBlue wasn't really in the news during that period. So there was heightened interest in this company for some other reasons. Maybe there were people out there who knew about the supply issues of AdBlue and they were taking advantage of their information at that point in time, which wasn't in the news at that point. But when AdBlue became more in the news during October and November, that's the period of time when the share price of DGL Group actually fell. It was also during that period when DGL Group increase their exposure to AdBlue. So that's really intriguing that when DGL or when AdBlue was more in the news, that's when DGL Group's share price started to decrease. But the share price has turned around in the past month, and it does look like there is increased interest in this company with the share price starting to move up again. That's all I have for this introduction to DGL Group. If you are well aware of this company, if you have more information to share about DGL Group or AdBlue and the effects of AdBlue on society as a large, I would love to hear your opinions, your thoughts. So leave that in the comment section of this video. If you have any other thoughts, any other questions about any other company on the ASX about DGL Group, just leave it in the comment section of this video. I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. See you later.